Welcome everyone to the AMS Live Advanced Market Sales. I am your co-host, Sean Ruggiero. This is your boss, Bridget Reimer. Thanks for joining us. Let's start out with the numbers.
Sounds good. So this is week 24 of IUL's issue paid. We have Regina H with 689, Chantel M with 301, Fred T with 437, Regina D with 460, Frank G with 588, Michelle E with 605, Jaime C with 929, Conrad P with 989, Christian D with 989, Monica W with 1039, Leonard D with 1129, Yvette B with 1132, Don S with 1176, JT with 1200, Carlos R with 1221, David W with 1282, Zachariah L with 1424, Lorena B with 1523, Araceli B with 1658, Gerald G with 1660, Brandon M with 1914, David P with 1918, Rebecca B with 1942, John B with 2261, Christina D with 2274, Mark K with 2338, John M with 2416, Cristobal S with 2,506, Michelle E with 2,693, Brigitte G with 3,116, Willie P with 3,627, Brittany S with 3,830, Iowa S with 4,080, Gary M with 4,083, Christopher F with 5,060, Nadine L with 5,087, and Grayson H at the top this week with 5,775 for a total of just over 75,000. A weekly paid for IULs, and that is a long list of agents.
That is.
That's exciting.
Yeah, one other thing, since we're talking about the IULs, is the new Mutual of Omaha electronic application, the e-app, is out, so please use it. Policies are getting approved in about 24 hours.
Right. And
you submit it right there. The nice thing about it, of course, I'm old, I still use paper apps. I filled out about 30% and hand it to you.
Fill in the blank.
But it tells you what you did wrong, right? So if you miss something, there's no NIGO, not in good order, is a real problem. With the e-apps, you're not going to have NIGO because you filled it out. It keeps you on the rails, keeps you structured there. So use that Mutual of Omaha e-app for that IUL. And the IUL, we've seen that people, once they get old enough to where they can't get the cash back or mortgage protection, so age 60 all the way to age 70 is a prime spot. And then for those younger people trying to take advantage of an IUL for tax purposes, for college savings, I think that's one of our questions, et cetera, it's more affordable because you can go down to $25,000. Because not everybody can afford a $100,000 plus fully underwritten policy. So the Mutual of Omaha IUL Express now has an e-app. And that's my commercial. So
great. Thank you for that announcement. But great list this week, you guys. That means there's a lot of you out there writing those, so that's exciting. All right, up next we have issue paid annuities between June 4th and June 10th. We have Ray M with 10,618, Andrew I with 24,818, Carolyn P with 25,000, Gary R with 25,000, Paul S with 25,000, Catherine A with 28,367, Teresa M with 40,000, Ray M with 41,305, Tiffany G with 43,439, Dan S with 2 here, each for 50,000, Silvana P with 54,585, Ray M, with 57,364, Bruce W with 61,489, Danielle B with 61,602, Matthew S with 70,000, Wayne C with 75,126, Blaine B with 77,161, Michael B with 100,000, Stealthy S and David A with a split on 101,390, Anthony B and Tiffany G with a split on 102,691, Ricky W with 112,763, Veronica D with 150,000, Georgina S with 163,258, Zach M with 199,906, Charles H with 257,999, and Zach M again at the top here with 265,750, bringing our weekly issue paid total to just over $2.2 million.
Awesome. And I see Zach M, multiple annuities, and how about Ray kicking butt there? I think he had 3 or 4, which that's the wheelhouse, right? Those people, Bridget, I think of your in-laws. I think of my mom. $40,000 is her entire life savings. That means so much to them. They can't lose the money. They need that structured safety and protection, sure growth, that compounding growth. And Ray's helping people like that. And look at that. This could be a $200,000 week. You start doing that 52 weeks a year, you're making $300,000, $400,000, $500,000 in just annuity production alone.
Right. So. They approach every appointment like there's an opportunity there to help. And so that's how they get those multiple. They're probably submitting, every other application or appointment to application. So they ask the question a lot. They get a lot of applications and they help whoever. They don't write anyone off as not helpable. So Yeah, awesome week. Thanks for kicking that into gear. We are excited to finish out this second half. We're going to the second half of the year already. That's crazy. Yeah. All right, Sean, up next we have a couple questions for our Q&A segment.
Okay.
Are you ready?
I'm ready.
All right, so question number 1 is an IUL question. This is from Francis. He wants to know, can an IUL be used to grow money throughout a child's life to create a college fund, as well as provide permanent insurance for that child all the way into their adult life?
Yeah, great question, because it seems like that's what it would be for. And we're here to sell IULs, but first we're here to put clients in the best position possible. And actually, when we get someone who says, hey, I have a child, 5 years old, 7 years old, 3 years old, 1 year old, we want to write an IUL on them so they can have it for college. It's actually not the best fit. Now, let me explain. If a child's life is very easy to insure, so you can only put so much cash on top of that. Let's say it's $100 a premium. That's kind of maxing it out. $100, let's say 85 of that is used to accumulate cash value every month growing up. And let's say it's a 7-year-old that you want to grow to 18. That's 11 years. Believe it or not, that's just not enough time to build up enough money when you look at the cost of college.
Right.
It's just not enough. So what we actually recommend is if you want to set money aside for your kid, try looking up your state 529, your cafeteria plan, and there's some saving options in there. But IULs are actually a better fit on the parent, because the parent's life can insure more cost of insurance, which allows you to cushion more of cash. You can throw $400, $500. And then guess what? If the child doesn't go to college, because if you're doing this IUL for them to go to college and it hasn't accumulated enough cash, you don't have to give it to them.
Right.
And I can see Tyson being like, hey, thanks, I'll take the $12,000 and go buy a Camaro.
College, yeah.
Exactly, right? And so you just have very little control over that, whereas if it's on your life, so if I have an IUL myself, which I do, I can accumulate more cash. What happens if I die? Lola's 7 years old. She's not going to be in college for another 11 years. In that 11 years, if I pass, now she gets a big death benefit. She can definitely pay for college. And if she doesn't go to college, or college is covered by a scholarship, then I have that money and I can use it for my retirement. I can use it for my long-term care. I can use it to start a business. I can use it for so many different things. So the IUL should be targeted on the parent, not the child. And if the child is looking for something, you can tell them, and you don't have to be a securities advisor, say, hey, you could look up what your state, because they're run at the state level, your state 529 plan might be a better option. But let's look at taking some of that premium, putting it on you, because you're how that kid's getting to college. Let's protect your life and build cash for you, and then you have more options if college isn't in the future.
Right. Yeah, that's perfect. I especially like how you mentioned Lola and getting a scholarship. Like she would be the likely one there.
Yes. Well, all my kids hopefully will get scholarships.
Hopefully the others aren't watching this.
I know.
We love Lola the most. All right, perfect. Next question, Sean, is an annuity question from Jean, and she wants to know, can a person purchase an annuity with money that they've won from a personal injury lawsuit?
Yeah. Very good question. I always start with yeah. The answer is yes.
We're done.
Yes, we're done. Thank you. Tune in next week. That can be a little tricky, okay? We actually have a white paper on the fflams.com resources tab, which talks about this in a little bit more detail. But just like can this person move their 401k while they're still working in in-service distribution, it's always worth asking. But there are two basic types of settlements. If it's a structured settlement, and those are tax-free, and structured settlements usually result in the loss of a limb, an injury, a disability, a disabling injury or event, then those are not taxed. Okay, so the IRS will not tax you on those winnings. It's called punitive damages. And they have to be one of two forms. Sometimes it's just a check, and you can move it into one of our traditional annuities. But sometimes it's in a structured settlement where they have to pay it out over a period of time. And that's actually done by very few companies. In fact, none of our annuity companies do it. It's like 4 companies across the United States. And you actually have to have these annuity writers who create their own actuarial table. It's the brokers who do that are very specific, very, very specific. And you are not one of those. So it's worth asking. The best thing to do is talk to the attorney who represented the person who received the settlement and ask them, say, is this something we can do a traditional annuity on, or does this have to be some sort of structured settlement? And if it's a structured settlement, you won't be able to do it. If they can do a traditional annuity, then go for it.
Yep, perfect. All right, so that wraps up our Q&A. A quick announcement here. I want to point back to the Firelight e-app that we launched a couple weeks ago for all of our annuity carriers, and then even some of our IUL carriers like Global Atlantic. big.
Yep.
So that IUL and annuity EAP link is now live in a couple spots. So you can find it on our FFL AMS website under submit an application. You'll have the opportunity to either upload a paper app for scrubbing or submit EAP, and that will go to a link to the Firelight Access website. If you don't have an account yet, you need to email us so that we can create an account for you that gives you access. Then that email will come directly to you from Firelight Access, and it's super simple. You get on, you create your password, and then you should be able to log on every time after that. The other part is the link is now on the it's not the CRM,
They call
Sean,
it the Agent Campus. So when you go to familyfirstlife.com and log in with your password, your email password, and that campus where you can see your numbers and reporting and access the CRM, it's the bottom link there. It says submit
on the left-hand side there.
IUL.
Yep. Yeah. So it'll be just it says submit annuity or IUL EAP. You click on that and it brings a pop-up to go to the Firelight Access site as well. So if you're not logged into the AMS site yet, but you do have your Family First Life login, you can now access the link from both. Both scenarios is the same situation where you would need to email us if you've never created an account yet. If you've done an Ask a Specialist or if you've written an annuity before, you're automatically added to the Firelight Access system. But if you haven't done either of those, then you're going to want to email us to get access to that site. But you can access it from either side, so that's exciting. We're getting people submitting it through there, and so far really good feedback. People are loving that.
Yep.
It comes to our hands first, so we're able to scrub it still for you before pushing submit. But it keeps it super simple. You can still do the EAP, which all our agents love doing EAPs, and it still gives us a chance to review that before it goes final to the carrier. So we're loving that and getting great feedback on that.
And it's critically important. Lauren has the number. I know you have the number. Something like 78% of business that's submitted is not in good order. Yeah. Which, with how the annuity companies have been, because you keep in mind this is very regulated. If it's wrong, I'd say half the time you're done with that annuity carrier. They can't accept any revisions now. So it's so important that you use the correct EAP. So it comes to the AMS office first, so the smart people in the office can take a look at it and make sure it's done in good order. And trust me, over time, even though that might be a 48, even 72-hour delay, it's going to improve your time to fund, and it's going to improve the percentage of annuities that you get funded. And you don't have those customers getting irritated because this is your third or fourth revision, or you have to go to them and say, I'm sorry.
They're declined now.
You're declined, and they're mad at you.
Yeah, exactly. And thanks for pointing that out, Sean, because it's true. If you go to the carrier websites and access the app from there, it does not come to us. So keep in mind, please, this is a specific link you will need from one of our sites, either the FFLAMS.com site or the campus for FFL. If you go to the carrier directly, those still don't come to us. So please use the new updated links on one of those two places.
Yeah. All right.
All right. That's all we have this week. We'll see you next time.
Thank you. Greetings, everyone. Sean Ruggiero. I want to talk to you today about two new marketing boosts that you have in the Marketing Boost library. If you're not familiar with it, the Marketing Boost library can be found at familyfirstlife.insurancedrip.com. These marketing boosts are available for you to use free, which will create leads through social media posts and emails that are sent out to your clients. The two new boosts that we have are going to be used to generate awareness and leads for annuities. The two boosts are as follows. We have one boost talking about Annuity Awareness Month, which is the month of June, okay? The other one is how you can add a 15% bump to your IRA or savings. And that's talking specifically about a Performance Elite product that could be used to add 15% to someone's IRA, all right? So these two boosts, again, free to send. If you go to familyfirstlife.insurancedrip.com, you're going to see these right here. You can preview the boost and then hit Launch Marketing Boost. We're going to show a quick segment here in just a moment that walks you through the steps very, very quickly on how to launch these marketing boosts. If you haven't used these, you must use them. You know, I sent out a couple boosts you can see here. One of them was the 15% bonus to your IRA. The other one was the National Annuity Awareness Month. Yes, I sent these out too. I posted them onto my Twitter account and I sent them to a small select group of email recipients. And if you look at my results here, I actually generated 3 leads. People that got back to me and said, hey Sean, this looks really good. Tell me more about this. So it's funny how even in testing this out, you can generate leads. So what would it do for you if you had hundreds or even thousands of people across Facebook, Twitter, LinkedIn, and your Gmail accounts, your Yahoo accounts, whatever it is. So again, we're gonna run the video that shows you how to use these boosts, But I encourage you, if you haven't been doing it, start today. Start now. It's simple to use. There's an online chat support right there in the bottom of the screen. You can do it from your mobile phone. You can do it from your laptop, your desktop, whatever it is. But use these marketing boosts. They're found at familyfirstlife.insurancedrip.com. They're exclusive to you as a Family First Life agent. And this is going to allow you to generate awareness, activity, and leads and business, help people out with their annuities during National Annuity Awareness Month, and how to add a 15% bonus to the IRA. Thank you, everyone. Appreciate it. All right, everyone. I'm going to walk you through the new marketing boosts that we have available at familyfirstlife.insurancedrip.com. So that's obviously the first step. Go to familyfirstlife.insurancedrip.com. Here's your marketing boost library. There's always tier 1 support here, Monday through Friday, 9 a.m. to 5 p.m. Pacific Standard Time. So if you have any trouble, need any assistance, you can go ahead and click there. The two new marketing boosts that we have, and we've had some really good success with some of the previous marketing boosts, with the hiring marketing boosts and the life insurance ones. But we have two new ones for annuities. One of them highlights that June is National Annuity Awareness Month. The other one talks about the 15% bump to your IRA. As we record this today, the market is down over 5%. Using something like an accumulation annuity with a 15% bonus, 10% bonus, 9% bonus, whatever the bonus might be for their age and for their state, could be of huge value. So that's why we have that boost there. But I want to focus on this one. It's time sensitive. This is already June. Go to familyfirstlife.insurancedrip.com and launch this marketing boost. Create some awareness and education around annuities and annuities at a national level. So if we click send now, it's going to give us a quick preview of how it works. You're going to be able to see the boost in its totality right here. Read it. Looks good. We'll go ahead and launch the marketing boost. Now, what we want to do is we want to add a picture. So I'm going to go to a library here, add a mug shot. You can crop it, move it however you want. You're going to put in your first name, last name, phone number, and you're going to choose a password. Go ahead and access the marketing boost. Now, when we do that, it's going to bring the marketing boost up one more time, and we're going to choose which accounts we want to link it to. To make this demonstration expeditious, I'm not going to go ahead and link them, but I just, connect to Twitter. Facebook is still a big one. I don't have my Twitter account up right now. But we're going to go ahead and hit send marketing boost. And once you send that marketing boost, you're going to have it sent out to all the email contacts that you synced, all the social media contacts or connections that you have are going to see it, and you'll generate a lot of leads. As I was telling you in a previous video clip, I had tested this out. I included something like 10 people that I was going to email it to, and I posted it to Twitter, Facebook, and LinkedIn. And I actually generated 3 leads just by doing that, just sending this out and saying, hey, it's National Annuity Awareness Month. I also sent out the 15% bonus. So I encourage you, this is a free tool. Go to familyfirstlife.insurancedrip.com and launch these boosts. And as they come out, we send them out. Put a calendar reminder. Launch one boost every week or every month, whatever works for you, and build up your digital community. Be collecting people's emails on your e-apps, okay? Get those emails down into your contacts, whether you're using Google or Outlook or whatever it might be. Add people to your Facebook sphere of influence, your LinkedIn, your Twitter. Build your social media and your digital media network, and then leverage it to communicate with them with these valuable marketing boosts. Hope that helps, everyone. Thank you so much.
And I am located in Bakersfield, California. I wanted to come on here really quick and first and foremost thank the AMS team, Sean, Bridget, Lauren, for having me on, and as well as Family First Life. It's truly an honor. I wanted to share with you guys my experiences that I've had with annuities and just telling you guys how easy it is to get into the door and start selling annuities. I know the word can be very scary and just very intimidating, being in a position to mess with people's retirement, something that they've worked all their life for. And it's truly a very simple process. We truly are putting people in a better position. And the system that we have here at FFL allows for someone to be completely unknowledgeable, not know anything about annuities. If you just follow the system, we have the right people in our corners that can help us, guide us through to make sure that, we truly are doing the best possible thing for our client. I say that because we do have, in my experiences, I was very intimidated with asking people about their experiences and their annuities. Like, I respected the financial advisors, and I thought that was just, I didn't go to school, I didn't study for that, I just didn't think that was my cup of tea. Being in the FFL system, we've learned doing the financial inventory that is an important question we need to ask. So I started asking, the magic question: what do you have that acts like life insurance that could take care of your family, God forbid, if something were to happen to you? I had a lot of people that reached out and said that they'd be very receptive and they'd give you the information that you asked. All you had to do was ask. As soon as you were done closing the business, then you bring up the topic, to bring out a statement that you're going to draw up an illustration for them, totally unbiased, and you're going to take it to one of your professionals to draw up something that could really interest them, their current situation. A lot of the times they're very open to it. You've already helped them in one department. It's not going to hurt them to help you. You take all that piece of advice all over to AMS, and you let AMS do the whole thing. They will train you on how to, all about the product, the best product that's going to make the most sense for your client. They will educate you in everything that you need to do. So I don't really recommend, just like we tell our, with the same thing with life insurance, we tell you, don't go learning all the products whenever you go in the field. You learn this stuff when you're on the go. This same thing happened with annuities. You just learn how to pick up statements, and you learn how to transport it over to the professionals, and then you let the professionals properly train you on a case-by-case scenario until you start familiarizing yourself in it. It all starts to make sense. I look back to where I was back in December. I had no ideas what even annuities was. It was very confusing to me. I didn't care to, it was just very intimidating. I got out of my head, and I said, you know what, I'm just gonna do what we're told, ask the right questions, and people will tell you, and you're already helping them in one department, and it's like, what's another thing? It's not gonna hurt to help. Then when you go back in to see the client, you're very knowledgeable. AMS has prepared you. You know exactly what to say. And worst case scenario, if you needed to, we have people in this, in our system that we have that are able to jump on a call with you and speak to the client while you're in there, the same way you would if you were in a mortgage appointment or you're in a final expense appointment and you needed to call your upline for help. The same way we have the experts that are available to help us. But I think the best thing that I would say is I would rather take a cut and split it with somebody, and learn, if you had to go that route, to take somebody with you, because what you're going to learn from it is an absolutely, you can't put a price on what you could do to help the client, per se. So, I reached out to, David Allen. David Allen also helped me. He went with me on a couple appointments, and because of his help, me being humble enough to help him and to ask him for help, he was kind enough to go with me, and I was able to see, the whole process. And because of me splitting a deal with him or having the help of AMS, I was able to now become knowledgeable. So now I'm running into annuities left and right. And because I had the help from, my fellow colleagues and the AMS and FFL team, I have been able to close, annuities that I never would have thought that I would be closing at 22 years old. So best thing I could say, guys, is, don't forget to ask the magic question, get out of your head, and treat it just as if it was You know, you're when you go get, you know, life insurance for your client and you're getting them 100, 200, 300,000, it's no different. You know, it's just their retirement money, and we're just protecting and putting them in a better position based on what their goals are. So that's my time, guys. Thanks so much for having me on AMS, and everyone, best of luck. We are all here to help us. You know, don't be afraid to reach out to any of us, you know, AMS, and hope you guys, you know, wish you the best, and we're here to help. Let's grow, guys. Take care.
Hey everybody, David Allen here, Family First Life Shepherds and Servants, coming at you from Los Angeles, California. And I wanted to talk for a couple minutes about my transfer process once a submitted application for an FIA, for a fixed index annuity or a rollover, has actually been approved, and the receiving company, no matter who it is that we're placing the business with, is ready to accept the transfer from the brokerage house. And it doesn't matter which brokerage firm we're talking about, so I'm not going to name any companies. The process is the same across the board. So what I'm going to do is I'm going to kind of go over what I do, what I say, and most importantly, why I say it the way I do, because our goal is exactly what the name of our company is, Family First Life. So we have to take care of the families. We have to make sure that they're taken care of. And what I've done is I've created a little bit of a system for this transfer protocol that actually engages the brokerage house that's losing the funds to our company to actually be on board with what we're trying to do and make it a lot easier. So the first thing you're going to do is, once things are approved, you're actually going to call your client back up and let them know that they're ready to receive the money, verify they're ready to move forward and continue moving forward, answer any last minute questions they may have, make them very comfortable, but set an appointment to go back and visit your client during normal business hours and make the phone call to the transferring company, the company that's losing the account. When you do that, you're going to make that phone call with your client's phone, and you're going to use your phone as a recording device. So when you go and visit with your client, and I'm just going to use the name William. I'm sitting with William. We call the company that he's been with for a month or 30 years, it doesn't matter. And William's going to call that company. The company is going to verify who William is: name, address, social, birth date, phone number. And then William is going to very simply state, I'm here with my advisor. His name is David Allen or Sean Ruggiero or whoever it might be. And I'm giving you permission to speak to them on my behalf. The transferring company is then going to start speaking with you, the FFL agent, direct, or me in this case. So I'm going to use me, and I'm going to use William, my test example. And I'm going to thank the transferring company for actually taking the call and working with us, but I'm going to let them know, and I'm going to acknowledge to them a couple of things up front. Number one, I'm going to acknowledge that they are recording this conversation. It's standard procedure. They all do it. I want to let them know that I'm aware of that. And most importantly, I want the client to know that I know that they're doing that, because I want to continue to build trust with my client. That's very important to me. The second thing I'm going to do is let them know that we are also recording this phone call. The reason we're recording this phone call is actually for three things. Number one, I don't necessarily have the best writing in the world, and I like to have a little bit of fun with that when I'm talking to a transferring company by letting them know I can't always read my notes. So I want the ability to let them know that I'm recording, because I need to be able to have a reference in case I don't write everything down based upon this conversation. Number two is I want to let them know that we are aware that FINRA, the national regulatory agency that audits and verifies the securities companies are doing their job properly, they have a rule for these transfers. The transfer rule that they have is 72 hours from the time of request, as long as everything is in order. So what I do is I let them know that I'm aware of that rule. I also let them know that we are going to be transferring money from them to another company, and we don't want anything to go wrong. We only want to have this conversation once. So I'm going to ask a series of questions to make sure I have all of the transfer protocol needed to make sure that the company that's going to receive these funds is doing everything that the company losing the account is going to require so that we can do this. The last thing I do at that point is let them know that if we don't take care of everything on this call, or if they actually mess around or don't give us all of the information, we have no problem filing a claim with FINRA that they are not acting in the best interest of the client. Then I'm going to ask a very simple question. Mr. Transferring Company Representative, now I'm sure you would agree the most important thing we can do is take care of the client, and there isn't anything you're going to do to really harm that process, is there? I want them to actually say, no, we're going to work with you, because I want that on the recording. After that, I say, thank you very much. I now say thank you after every question that I ask. And my questions are very simple, and this is exactly what I ask. Question number 1, does the transferring company require transfer paperwork from the receiving company, or does the transferring company have their own paperwork? If they have their own paperwork, I simply ask them to email it to us right now, and I want to fill it out with them on the phone so we make sure it's done properly. If they don't require it and they just want our paperwork, I say thank you. Question number 2, does the transferring company require a letter of acceptance from the receiving company? They're going to give us a yes or no. That's great. I don't care what the answer is. I just want an answer so I know what to do. And I say thank you again. Question number 3, is there a notary requirement? The reason I ask is because based upon the balance in the account that's going to be transferred over to our company, we are going to most likely either require no special signatures, or they might need a notary signature to verify that the client is actually the client. If it's a notary requirement, I thank them and I immediately ask them for an email address, because what I know to be true is just about 100% of the time, we can actually simply email the paperwork to them, and then they have 72 hours to get the money transferred and on its way to us. I will not actually ask if they require a medallion stamp, and that's for very specific reasons. But if they counter with a medallion stamp can only be done by, in this case, Williams Bank. But right now, with what's going on in the United States and actually the world, most banks are not taking in-person meetings because they don't want to deal with it. So if the transferring company requests a medallion, I'm going to right now on the spot, since it's on the recording, I'm going to ask for a waiver of that because the bank's not taking these. And in notary is the same thing. Asking for a medallion is just trying to make it a little more difficult. I'm okay with a notary because you can go to lots of different companies and get a notary. You can call a notary and they can come in and actually take care of it for you in person as well. But I'm going to fight to get that medallion requirement waived because it's really, really difficult, if not impossible right now, to actually get that to happen. And I want to get that taken care of. Now, if they force our hand, do we have to get a medallion stamp? I'm going to ask for the transferring company's overnight address because they're going to need the original paperwork in order to take care of what we got to do. The next thing that I'm going to do is I'm going to ask them very simply, when the paperwork is received and they deem it to be in good order, I just want to verify, since we're recording, that they are going to abide by FINRA's 3-day rule to get the transfer taken care of. I want them to say yes because we're recording. The last thing I do is say, I appreciate you guys helping us out on this. I want to remind you that we are recording this and that I really don't want to have to go to FINRA with it. I just want to take care of the client, and I know that that's what you want to do too. So my last question is very simple. You've answered all of my questions. Do you, as the transferring company, have any paperwork that we've not talked about, have any signatures that we've not talked about, have anything in your transfer process that we need to do that you have not already spoken about? And please let me know now, because I don't want to have to make a second phone call. I just want to take care of it. Okay? It's literally that simple. That's all we have to do. Our goal is to take care of the client. while also making sure the transferring company is on board with the recognition that they have a legal requirement to get this done within 72 hours. And I want to make sure that they're going to do that. I don't want to give them any reason to tell us we didn't do something, which is why I record the conversation, because if I have to call them back to find out why it's not transferred, I'm going to refer them to this conversation, date, time, the name of the person at the transferring company that we spoke to, and I want to make sure they understand that we will absolutely send this recording to FINRA if they're not going to take care of the client's wishes. With that, we make sure we're taking care of the client. That's the most important thing that we can do. And this is exactly how we can make sure it happens. I'm David Allen, Family First Life Shepherds and Servants. Have a great day.
Welcome to this week's AMS Live. I'm on with Jay Rosenkrantz from Athene, and we're going to talk to you today about the suitability guidelines. So Jay, do you have a few slides just to kind of introduce why we do suitability and what the importance is overall of that?
Sure, and thanks for having me, Lauren. I really appreciate the time. So it seems like, every time we run into a suitability issue, specifically a decline, it seems like it happens all the time, and it really doesn't. Our declines run around 1 to 1.5%. So for every 100 cases that we process, we'll have 1 to 1.5 declines. And there's usually a pretty good reason for it. The guidelines I show here, why do we have them? It's not because we don't want the business, but the guidelines are really a way to keep everyone, Athene and the agent, out of the regulator's microscope. So our job is to keep Athene as well as the agent distribution out of harm's way. So we're trying to comply with all state requirements, and our guidelines are set by the compliance area. And we evaluate what other companies are doing, other carriers similar to ourselves, every 6 months or so when they meet at LIMRA compliance meetings, just to make sure we haven't strayed away from what other people were doing. And if we have, we will make we'll make changes to our suitability guidelines to make sure they're in line with the rest of the industry. But we do get audited quite frequently by regulators, and the targets of their audits are generally around certain cases that meet specific criteria, and we call those red flag cases. And where we see I guess I'll open it up to you at this point if you want to interject.
Okay, yeah. So I guess one of the main things, at least that we see from our side, is a decline due to net loss. And so that's, I suppose, when they're losing money in a current replacement, moving one annuity to Athene. And so can you kind of explain what those requirements are and what they need to do to get approved, or what they need to look at to see if that client is suitable?
Yep, absolutely. Yep, and that's probably one of our biggest reason for declines is that the client is experiencing a loss moving from one annuity to another. Could be a fixed index annuity, could be a variable annuity. Either way, regulators are very sensitive towards a client's loss in that transaction. Our position is best case scenario, we would like the client to at least be neutral in the transaction, moving from their old annuity to a new annuity. Perfect scenario is they would actually be better off. So when we say net loss, what that means is if a client's in an annuity currently and they want to move to an Athene annuity, let's say they have a 5% surrender charge currently. So we would like to see a bonus that offsets that surrender charge. And when I say bonus, I mean premium bonus, not the income-based bonus that's available on Ascent or available on Agility. So it's the premium bonus that's prevalent on Performance Elite. There is a 3% bonus on the Ascent, but some people often confuse the higher income bonus and think that they can use that to offset surrender charge, and that's not the case. So a 5% premium bonus would offset a 5% surrender charge. Now, there are cases where we may approve up to a 2% loss in circumstances that make sense. So going back to the previous example, if a surrender charge was actually 7%, we could potentially use a 5% premium bonus to offset that 7% charge. The client would carry a 2% loss, but assuming that everything else was suitable, we could still potentially approve that. There's no guarantee that that would happen, but just know that that exists. And I will tell you that there's a handful of states, California, Minnesota, and New York, where there are no loss states. So we can't take even a penny of loss. So if the surrender charge is not offset by a premium bonus, so if there's even a 0.1% surrender loss, that's going to be a decline in those states. So just keep that in mind.
And can you speak to, say there is some sort of admin fee or a prorated rider fee that has to be taken off of that surrender value when they're moving the money? Is that counted as a loss as well with those 3 states?
Yep. So there are, if you can identify that the annuity that's coming over, if we can document that it is not a surrender charge and it is in fact an administrative fee, we can bring that to the attention of our compliance director and potentially get that through. So I have seen that happen. So that's I'm glad you brought that up.
Okay, perfect. And then the next issue that we see when getting approved through suitability is their net worth. So the net worth ratio to the amount of money someone already has in an annuity, including the money that they're going to put into an annuity. So what are the guidelines that Athene kind of likes to stick to in regards to their net worth?
No problem. So we have a financial section of the suitability form, and it's not the easiest to fill out. I'll be the first to admit. And in July, we're going to come out with a revision to the form that I think will reduce the amount of errors that we have in the form. I think it'll flow a lot better going forward. But to your question, right now, we're normally comfortable accepting 50% of the client's net worth. And if the net worth is $100,000 or less, we will not accept any more than $50,000 of the client's net worth in annuities. Now, if the client has more than $100,000 and they do have a positive monthly cash flow, there's a potential that we could go up to 75% of their net worth within an annuity. But again, that depends on the client's complete financial picture, liquidity, and things like that. So 50% is the rule of thumb. Potentially we'll go up to 75%. As far as liquidity goes, if the client is under 59 and a half, then we want to make sure they have at least 3 months worth of expenses in liquid assets. If they're over 59 and a half, we bump that number up to 6 months worth of expenses.
Okay.
And then just a few more notes. 401ks and IRAs, annuity premiums, the house, cars are not considered liquid assets. So what we essentially look at, if you can get to that money within 24 hours, then we consider it liquid.
Okay.
But good news is, and this is a recent change for us, is that qualified funds that are out of surrender for clients that are over 59 and a half are considered liquid assets. So if those funds are needed to get you to 3 months or to 6 months, that's a good note to know.
Okay.
And then one thing about, I've seen it come up, not a lot, but sometimes clients will write unemployed on their suitability form. And we don't accept contracts for people that are unemployed. Now, there are times where we will look, if the client is married, then we will take the husband or the wife's financials into account if they are unemployed. And certainly having a positive cash flow will have will have an impact there if their income is higher than their expenses. But just know that that sends up a red flag if the client's unemployed. If they're retired, totally different story. That's fine. And even if they're disabled, the amount of disability that they're receiving, the income outweighs their expenses. We will consider those as well, but keep an eye on unemployed.
Okay. And I wanted to point out one more thing right above that bullet point. You mentioned it says something about customers can use a secondary home as equity in it as a source of liquid assets. So as far as I've understood, that just goes towards their non-liquid assets. But is that true? Their home equity for their secondary home can be considered liquid?
That is true, and I believe there's a caveat there in that the secondary home can't be on the first home's property, but I believe that's a true statement.
Okay.
Yeah.
So yeah, if it's a vacation home or a rental home and they have equity in that, they can list that as liquid
Right.
assets. Okay, great. That's good to know. And then the next suitability guideline we're looking at here is sometimes clients get phone calls from Athene asking a few different questions before suitability gets approved. So just so agents know to expect that and kind of prep their clients for that, what are those phone calls? What kind of questions do they ask and why do they call?
Yep. Good question. So, we're required by the Iowa Insurance Department to randomly call clients just to review a sale for suitability. We call generally around 10% of all cases. The call is mandatory for any client that's 75 or over. And it's also mandatory if we're doing an internal exchange from one old Athene annuity to a new Athene annuity. So those two categories generally make up the 10% of all calls. So we don't do a whole lot of random calls, but we will call if the client's 75 or over, or if it's an internal exchange. So primary ones being the client being 75 or over, and essentially, we're just looking to find out does the client understand that by entering into a new contract, they do have a potential for free withdrawal, depending on what contract they're in. But over and above a free withdrawal, they would have to pay a charge in order to take money out. So they need to make sure they understand that they're entering into a new surrender charge period. A, B, if there's an income rider or a fee that they're paying, we want to make sure that they understand that they're entering into a fee involved in their annuity. So it could be an income rider fee or what have you. And then C, we want to make sure that they understand who the agent is that sold them the policy. We sometimes run afoul of a client signs the application, the agent signs the application, but the person that signed the application has never met the client, and in fact, whoever they met was a different person. So a surrogate agent, if you will. So we're obviously need to discourage those types of sales. So just trying to get those pieces of information from the client. And we do have a client call flyer that's available. And Lauren, if you don't have that, I can certainly send it to you to distribute to the Family First agents. And it just kind of goes over when we make the calls and what we're looking for in those calls. And I guess my rule of thumb would be, as you're signing an application, I would just let every client know, hey, Athene may be reaching out to you just to confirm some of the things that we talked about today. Just make sure you take the call and answer the questions. And there's nothing to it really.
Okay, awesome. Yeah, and if you wanted to send that to me, I would be happy to distribute that out to our agents. If any of you guys would like that, just email info@fflams.com and we'll get that out to you to prep your clients for that call. And then next one, I see the second to last bullet point on here is another reason people will receive client suitability phone calls is the non-resident sales. So can we talk about the non-resident sales, what that is and what requirements surround that?
Sure. Yep, absolutely. So, what happens most often where we have a client that maybe lives in Kansas City, Kansas, but works in Kansas City, Missouri. So two states that are very close to each other. So oftentimes a client will live in one state but work in another state, and their advisor may be in another state. And so they end up signing the paperwork in the advisor's office in a state that they don't live in. If that's the case, we need, on top of the application, there's an extra form that we have, a non-resident sale form that needs to be included with the application. And that form essentially says that, this is the reason why I am in another state than where I live. And those reasons could be I work in that state. So I live in Missouri, but I work in Kansas. B, I have a home in that state. So I live in Missouri, but I also have a second home in Kansas. Or C, other. And other could be a variety of reasons. It could be I'm on vacation in that state, I'm visiting family in that state. What it can't be is I'm going to that state just for the sole purpose of buying an annuity. So that's what we're trying to make sure that we can express to regulators, that people aren't going to other states just to buy annuities. So that is that's kind of the reason why we have this non-resident sale form.
Okay. And are there any states that don't accept this, where they require you to write that annuity in that state and that state alone, if that is your primary residence?
There's 7 states. So Arkansas, Massachusetts, Minnesota, Mississippi, Utah, Washington, and Wisconsin. So know that in those states, so if someone lives in, the western part of Tennessee and has clients in the eastern part of Arkansas, those clients can't come from Arkansas to Tennessee and write the paperwork on Tennessee paper. The agent has to be licensed in Arkansas and has to go to Arkansas to do that business, as an example. There's a quirk with New York. So New York, we will allow non-resident sales to a point. The agent has to have their resident license in a state other than New York. So the classic example is I live in New Jersey. My primary license is New Jersey. I have clients that live in New York. Since my primary license is not in New York, it's in New Jersey, I can actually I can write business in New Jersey on New York residents as long as they come to New Jersey for a reason other than to buy the annuity. And then they would include that non-resident form with the application, and we would accept that business.
Okay, that clears things up, I think. Thank you. And then the last point we're going to talk about today in this interview is large case approvals. So we know that sometimes if people have a large amount of money, they can't just apply for suitability and get approved right away. They have to jump through a little extra hoops. So let's talk about that.
Yep. So the good news is we just raised this recently. It used to be $1 million and over, and it's gone to $2 million and over. So every contract that every FIA that we have, no form is needed, no extra attention is needed if the contract is under $2 million. And one good thing to know is it's full compensation up to $2 million as well. If we get above $2 million and over, then we need a large case approval form. So that form just has additional financials that need to be filled out on it. That form needs to be filled out and sent into Athene ahead of the application. So we send it to about 6 different departments and get it approved ahead of time just to make sure that we've approved the large sale. Then we send it back to the agent. The agent includes it with the application. They send it in with the application. Still has to go through the normal suitability review at that point, but we've at least approved the transaction to be above $2 million at that point. And if it's over $3 million, then we need to get a little bit more information. And then just know that if it is over $2 million, it really depends on what product you're in as to whether or not you're going to get full compensation. If there's no riders, so if you do the base version of the Performance Elite, we'll do full compensation on well over $2 million. If there is a rider on the contract, then we will only pay out partial comp above $2 million.
Okay. Great. I think this has been super informative, and just for all you agents out there, we know that there's a lot of pieces to suitability, and so we hope this helps you just kind of understand and write those applications. We're both here to help you on the Athene side and on the Family First Life Advanced Market Sales team side. So we just hope you guys continue to reach out to us, and thank you guys so much for your partnership, Jay, with Athene. We really appreciate it. And we are actually going to be back for part 2 next week. So make sure to tune in, and we're going to talk about more of the replacement side of annuities.
Thanks.
All right. Thank you, Jay. See you next week.